Grocery stores have been in the news a lot since the pandemic began. Supermarkets have been compelled to adjust to a quickly changing market due to alarming levels of panic buying, the rise of online grocery shopping, labor shortages, shipping delays, and price increases. And this shifting environment has resulted in numerous store closures for many chains. Some of the biggest names in the industry had to permanently close a number of locations due to financial difficulties, while others had to temporarily close for safety, store cleanings, and employee welfare. In this video, we will talk about 10 biggest American grocery store dying in front of our eyes due to recession. But before that, please like, subscribe, and click the bell button for the latest economic updates. Now let's get started. 1. Fresh time. Before the pandemic, the supermarket chain was steadily vanishing from our economic landscape. Only 1 year after opening in the state, the specialty grocer recently announced the closure of its final stores in Nebraska, according to J.J. Parkovich, president and founder of Retail Insights. After the stores failed to meet expectations, the company was forced to make a hasty retreat. Specialty gross sales have been stagnant for the past 12 months, due to their inability to stand out from traditional grocery stores and maintain consumer relevance. According to the expert, despite shocking growth in the previous quarter, Fresh Time's most recent earnings results pale in comparison to those of larger supermarket chains that appeal to consumers with low prices and one-stop shopping, which indicates that it still faces threats to its existence in the erratic retail environment and that additional closures could happen soon. 2. Lucky's Market. The regional natural foods chain, which first opened its doors in 2003, is currently bidding farewell. Lucky's Market saw a sharp decline in sales in its most recent fiscal year. The company had an estimated $100 million net loss and faced a 10.6% drop in sales, which was a major blow considering it operated well within margins due to its low overhead. The majority of its stores were based in Florida and Colorado. It quickly gained popularity with customers thanks to its wide selection of food staples and low prices, but as larger competitors began to enter the organic food market, Lucky's sales quickly declined. Due to financial difficulties, the company had to file for bankruptcy, close 80% of its stores, and eliminate over 3,100 jobs. As of today, only 6 Lucky's Market locations are still open. 3. Fresh and Easy. With the intention of competing with American food retailers, the British chain Fresh and Easy came to the United States. Unfortunately, the real estate and economic conditions there were already slowing down when it arrived. Over the years, the company racked up debts of up to $1 billion. According to court records, Fresh and Easy lost about $22 million per month and filed for bankruptcy for the third time in as many years. Tesco, the parent company, recently closed 12 locations across the country and is now attempting to sell 30 stores. 4. Fairway Market. The well-known New York supermarket chain known for its gourmet food and pack stores has been experiencing financial difficulties for years before declaring bankruptcy for the first time in 2013. Despite the fact that it reappeared and became one of the most recognizable roses in the Manhattan region, the company's recent financial issues and crushing $174 million debt have caused it to go out of business. Only about 9 locations across 3 states have survived the downturn, with lead Fairway Market planning to file for bankruptcy a second time in 2020 and selling some of its locations to Village Supermarket. Owner of ShopRite executives said they had plans to keep some stores open. The reality is that just because Fairway says it wants to continue operating does not mean it can. Recent history is full of examples of retailers who exit Chapter 11 only to quickly re-enter bankruptcy, many of which ended up liquidating and going out of business. The grocer's track record isn't particularly reassuring to creditors, who have already witnessed the chain collapse twice in the past after Radio Shack, Payless Shoes, Gymboree, and American Apparel all followed that path to closure. 5. ShopRite. Since its founding in New Jersey over 80 years ago, the largest retailer-owned cooperative in the country has maintained the tradition of neighborhood mom-and-pop shops. Recently, however, the company has been forced to close some of its most famous locations in the New York region. The company cited declining profits as the catalyst for the decision. 6. Piggly Wiggly. When the company was founded in 1916, it marketed itself as the nation's first true self-service grocery store and quickly spread to communities in 17 states. However, these days, its recognizable storefront and mascot, Mr. Piggly, are getting harder to find. Several Piggly Wiggly locations closed in 2011 due to labor shortages, and 3 more have followed suit in the first half of 2022 after decades of service. Stores in Florence, South Carolina, and Nashville, Tennessee, have shuffled. 7. Sprouts Farmers Market. The chain that is frequently cited as Whole Foods' main rival is in peril. Sprouts Farmers Market stock has fallen more than 24% since the start of the year. The formerly high-flying company, which has 340 stores and is bigger than specialty rivals but still dwarfs Whole Foods with 500 locations, is still trading at historic lows, has lost about $1 billion in market capitalization since last year, and has been valued by investors at about $4 billion less than they did in 2015. In a rapidly evolving digital food industry, the outlook for small and regional cruises is becoming more and more challenging. Retail landscape since July, the supermarket has closed a number of underperforming locations, and more closures are anticipated in the upcoming quarters, according to Kelly Banya, an analyst at Capital Markets, who wrote in a research note to clients. 8. Shoppers stop. Currently, there are only 14 Shoppers stores left in the Washington, D.C., and Baltimore regions, and according to the Washington Post, the grocery chain's parent company, United Natural Foods, started selling or closing most of its stores in an effort to exit the retail industry permanently. Popular German discount grocer Lidl purchased many of the Sharper locations that were still available through the liquidation sale. 9. Stop and Shop. 8 months after announcing the closure of its Little Neck, New York location, about 2,000 customers signed a petition opposing the closures after Stop and Shop announced on September 23 that dozens of underperforming stores would be closing their doors permanently this month. Unfortunately, the number of signatures was insufficient to save the stores. 10. Sam's Club. The pandemic and numerous protests that have become standard in 2020 forced Sam's Club to temporarily close hundreds of stores and suffer a significant loss in profits, but these closures were a minor inconvenience in comparison to what the company had faced in 2018. Sam's Club closed 63 of its stores without warning, shocking its employees, who found themselves suddenly without a job. The membership retailer Sam's Club, known for using the last leader strategy, which entails purposefully losing money to crush the competition, experienced trouble back in 2015 when revenue dramatically dropped. Ironically, the megastore known for using the last leader strategy built its business model to appeal to small businesses. As a result, the company faced a significant backlash from the media and from employees who were left on the street. All businesses are experiencing a difficult economic climate, and as we lose smaller specialty store chains, we become more dependent on large corporations. This makes consumers more susceptible to unexpected price increases and gives them fewer options. On top of all of these closures, thousands of supermarkets may close in the coming years. So far this year, 1.3% of U.S. supermarkets have been permanently closed. In other words, grocery inflation is here to stay, and these are only the very first chapters of a crisis that will last for several years. As consumers increasingly turn to e-commerce for their grocery shopping and businesses struggle with the rising cost of real estate, energy, labor, and supplies, grocery inflation may decline by an additional 6% over the next 4 years. So, what's your takeaway from this video? Let us know in the comment section below. If you found this video thrilling, make sure to hit the like button. Also, subscribe to the channel and press the bell icon to never miss an update from us. Thank you for watching. We'll see you at the next one. Until then, peace.